Hello, everyone. Welcome to the Critical Elements Lithium Corporation live session. It is my pleasure today to host Eric Zaunscherb, chairman of the company, to present the story to all of you. Without further, it'll be about a 10 to 12 minute presentation with questions at the end. And without further ado, I'm going to have Eric start. Please, Eric.
Thanks. Thanks very much, Bruce. And thank you very much, Red Cloud, for putting together such an excellent conference. Well done. So yes, I am Eric Zaunscherb. I'm the chair of the board of Critical Elements. I was honored to be a mining analyst for 34 years. And then after retiring from Canaccord Genuity, running the mining equity research team, I joined the board in March 2020 and then became the chair in September of 2020. So it's a great team to work with and a wonderful company. I hope you'll agree with me at the end of the presentation. So our vision is to become a large, responsible supplier of lithium to the industry. Large, that relates to the fact that we have a 700 square kilometer land package. And the Rose deposit that we're going to talk about today is just the first of what we think will be several potential operating centers within that package. Responsible in the sense that it's important to have a very strong ESG presence. We are closer to the beginning of our journey than the end on the ESG side, but it is something that we are working on, and we have some natural advantages that we'll talk about as well to move forward in that space. Our first project is Rose. We consider it to be one of the purest lithium hard rock deposits globally, and I'll explain why. Quebec, as most of you know, is one of the most important and highest regarded mining districts globally. We have a very strong relationship with our Cree Nation neighbors, and that's been formalized in an IBA agreement. And we're also at the stage of permitting, where we have already received our federal permits for phase one, and that was received in August, and we look forward to our Quebec permitting, which we hope to achieve by the end of the year. Basic shares, 184 million out, as you can see in the capital structure here. At today's price, you're looking at about 290 million market cap, which is about 4.4 times NAV for phase one alone. You can see here 8% ownership of management, so we do have skin in the game. Apologies to Beacon Securities. They are now the fourth company that's covering us. That was recently done, and we believe that there are several more in the pipeline as people begin to recognize what Critical Elements Lithium is about. 5 investment highlights I'd like you to focus on. One is that, as I mentioned, it's one of the highest purity spodumene hard rock deposits globally. We are targeting lithium hydroxide production around 2025 in phase 2, and it's important to have that high purity. 2 is, again, strong First Nation support for what we're doing. 3 is a management team that's been there and done that, and specifically the former CEO and president, as well as the CFO of Rockwood Lithium, are on our board and in our management. They sold Rockwood Lithium in 2015 for $6.2 billion US to Albemarle. 4 is the availability of strategic partners. I believe optionality is extremely important. We could have done all kinds of MOUs on offtake in the past, but we are very adamant about having investment to come along with that offtake, whether it's done at the project level or the corporate level. And in this kind of a market where we're seeing the supply deficit looming on the horizon for spodumene concentrate in particular, but we'll see it also with the lithium end products like carbonate and hydroxide, that this investment model is something that will become quite real. And then finally, re-rating opportunity. As I mentioned, 0.4 times NAV for phase 1 alone, depending on with whom one speaks. The recent neolithium deal with Zijin has been done at anywhere from 0.8 to 1.1 times NAV on their project. And you can see what sort of a re-rating opportunity is associated with that. In addition, we're looking for a re-rating associated with the delivery of technical studies on our phase 2, economics of which are not yet in our marketplace. The leadership team I mentioned, Stefan Haber and Marcus Brune, were on the management team for Rockwood Lithium that was then sold to Albemarle. On the ground side, on the operation side, Jean-Sébastien Lavallee, our CEO, he and his family have a long history in Quebec of geology, of metallurgy, of engineering, as well as a strong relationship with the Cree community. Paul Bonville, a mine builder, 30 years of experience, and Jacqueline Leroux, as environmental manager, has been deeply involved in the permitting of operations in Quebec for several years. I mentioned an extensive portfolio. We have 700 square kilometers in that region in Quebec, and you can see here the pink star that is the location of the Rose deposit and the land package around it. We also have a significant land package on the belt, which includes the Wabouchi deposit right here. We have existing known spodumene pegmatite mineralization that's been discovered at surface and in the drill. And so we believe that there's a lot of potential to expand. In terms of infrastructure, you can see the Plan Nord Highway here, the Hydro-Quebec access running up there. Also importantly, you can see these dashed lines, which are the grid in the area. And literally underneath the power line right here is the location of the Rose deposit. So we'll actually have to spend a few $1 million to move that power line, which is just great when you think about the 93% of the power in Hydro-Quebec comes from hydroelectricity. Very, very important for the ESG factor that people are looking for from the end users. I mentioned the strong relationship with the Cree nations. We have the Pictou Agreement, which was signed in July 2019, and there are all kinds of benefits that are associated with that. We're very excited to work with our neighbors on things like aquaculture, education, infrastructure, and so on, obviously in jobs as well. So that's a strong relationship that we're very, very honored to have with them. One of the things that attracted me to critical elements, it's really important, is the conservative nature. And so that expresses itself in the two-phased approach. And as the Rose deposit, as a mine, produces ore, which then goes into the production of spodumene concentrate, that is phase one. And so in phase one, we're looking at about 25% of production in technical grade spodumene. That's low iron spodumene concentrate that goes to the glass and ceramics industry, like the screen right in front of you right now on your monitor or laptop, or the screen in your phone, or the Le Creuset cookware you use on your stovetop. That's the sort of thing we're looking for. And the glass and ceramics industry is very keen to have multiple diverse sources of supply. So it's great to plug into that with 1/4 of our concentrate production. The other 3/4 is chemical grade spodumene, which is extremely pure and extremely attractive for conversion onward to lithium hydroxide. And so for the first 2 or 3 years of production from phase one, that will go into the market for conversion onward. The second phase, however, is where we build our own conversion capacity to lithium hydroxide, and that will then be going as lithium hydroxide directly to the EV market. When I talk about purity, 2 of the most important contents in an ore from a lithium perspective are iron oxide, Fe2O3, and mica. And so at 0.8%, the Rose deposit is at the lower end of iron content. That makes your ore less green for those of you that have been on a site visit or seen spodumene concentrate. On the mica side at 2.7%, 2.7% is the lowest that I could find when I look at the technical studies that are available publicly. And that combination of low iron and low mica means that you can have a much simpler flow sheet, and simpler is cheaper. In addition, you get a nice recovery rate. So 87% of the lithium in your ore comes into your spodumene concentrate. And that's the best that I could find in the industry. In terms of the spodumene concentrate itself, at 0.4% iron oxide content, that's one of the lowest in the industry. That's very attractive. A portion of the deposit is actually even lower, and so you can get below 0.2%, and that's that 1/4 of our concentrate production that goes to the glass and ceramics industry. Phase one, this is the feasibility study. results that came from 2017. In 2019, those results were reviewed by Primero Group, one of the top builders of concentrators in the industry right now. And that produced some very, very robust numbers. It's been those, as I said, the CAPEX has been reviewed by Primero. They're very comfortable with that 341 million Canadian initial CAPEX number. And at 750 US per ton for chemical grade concentrate, that generates a 35% after-tax IRR, less than 3 years after-tax payback period. Very robust numbers. So although Rose is not one of the highest grade deposits out there, it does generate a beautiful margin. It is a very attractive project. So what does it produce? It produces 50,000 tons of technical grade, again, for the glass and ceramics industry. In this case, we're talking about 5% concentrate. If we boost that to 6%, which is easily done, you can do 150,000 tons of that. So overall, 200,000 tons of concentrate on average through the life of the mine. If we're looking at costs, you can see this line, this column here in US dollar terms, even before the tantalum credit. You're looking at costs of $370 US per ton concentrate. We used in our feasibility study $750 a ton. The current contract prices, average realized, if you will, is closer to about $800 per ton, and spot is over $2,000 per ton right now in some cases. So it's a very, I think, a good long-term number and a great margin. Phase 2, I'm not going to go into the details of it, but it's using the Metso Outotec process of alkaline leach for the production or the conversion to lithium hydroxide. And that alkaline leach is a very environmentally benign process. We're very pleased to have that. A bit more detail on that. So bottom line, we think vertical integration is the way to go. There are plenty of converters that were built in China that don't have captive spodumene feeding them, so there's a real tight market coming. We have a number of important catalysts coming. One is the completion of the permitting process with Quebec, which we hope will occur near term. We're evaluating strategic partnerships in order to put together the funding for that, and then that'll be followed by the final investment decision. In terms of timelines, we're looking at 22, 23, construction in 22, ramping up in 23 for the production of spodumene concentrate, and then 24, 25 for phase 2 lithium hydroxide production to come to the market. In terms of funding, we're looking at raising 400 million Canadian, 50-50 debt equity. There's some excellent debt sources of debt out there, including the province of Quebec, that we hope will participate in that level. On the equity side, we have been adamant, if you want our spodumene concentrate offtake, then you have to be a participant in the investment in the company or the project. And that is becoming very much more likely in this tight market. So that's a quick run through, Bruce. I'm not sure if you have some questions for me there.
Well, the one thing I was going to ask is, you mentioned up front that being in Quebec is a big strategic advantage. It's a wonderful jurisdiction on a global basis, but I just want to maybe ask to see if you can emphasize a little bit on the infrastructure side, how supportive, the Quebec government, the Quebec investment funds are towards projects in the province.
Right. At this point in time, we don't have any participation on the part of the Quebec government in our equity, or the company has no debt. However, as I mentioned, there's a $1.9 billion fund that's been created in order to support the battery hub that is evolving in Quebec. And you have to go upstream. You have to look at where that lithium is going to come from. So we're pretty confident that there'll be some form of participation financially. In terms of permitting, we are waiting for the Quebec permitting side. We have the federal permitting, so we do expect that to occur over the next while. Hydro-Quebec has been extremely good to deal with. We've already had discussions about moving that power line and plugging into it. And so Quebec Hydro is extremely cheap, and it's low carbon because of that 93% hydroelectricity. And so we do find it to be an excellent place. And of course, the human capital in Quebec is outstanding. The engineers, the chemists, the geologists. We're very wealthy from a human capital perspective, and we're looking forward to working with people in Quebec on that.
Well, Eric, I thank you very much. Unfortunately, we're out of time, but really appreciate you coming and presenting today us here at Red Cloud.
It's been a pleasure. Thank you, Bruce.